look, it was a big weekend of auctions. Around 1,200 went under the hammer across the country. The national clearance rate was 83%. Let's look around the states now. In Sydney, where there were 320 auctions, the clearance rate 91% is elevated. That's quite clear. There were also 1,546 private sales across New South Wales and Melbourne. More than 500 homes went under the hammer. The clearance rate there lower, 79%. And indeed, there were 93 auctions in Melbourne that were passed in. That's important. But there are also a further 1,286 private sales across Victoria. In Brisbane, there were 47 auctions. The clearance rate here was 77%, but there were also another 1,278 private sales right across the state. In Adelaide, 51 auctions, a clearance rate 90%, so it's strong. A further 360 private sales in South Australia. To Canberra, 42 auctions, a clearance rate also here hitting 90%. And in Perth, 3 auctions, 2 were sold, and 626 private sales in WA. Let's bring in here Eleanor Creagh, REA Group's senior economist. Eleanor, always good to have you on the program.
Really?
I just want to start with this because I'm wondering, with the amount of, or the volume of properties that are hitting the market, whether at some point the buyers, the potential buyers, their appetite is going to be sated. That's going to be the important point, isn't it?
100%. And I think we will reach that kind of turning point later this year. We are already seeing that, buyer demand has moderated off the really, really strong levels that we saw last year. But, it still remains incredibly robust. Clearance rates are very strong. And it does show that, all this talk of kind of potential rate hikes and price falls out in the future haven't really dented buyer demand too much to date. But certainly I think, we're at a point where sellers are looking to kind of cash in on the price growth that we've seen. New listings are elevated. That'll mean auction clearance rates will begin to ease. And we'll see that kind of next wave of buyers maybe isn't quite as large as the prior wave. But I think we can't forget that there is, a lot of people that are sitting on a substantial amount of equity. So although affordability is starting to bite for some, for those who already own a home, that is going to underpin transaction volumes as well.
And those people that have got the cash have either sold properties or have, simply just been sitting on savings. The Treasurer says it's $424 billion worth of savings in Australia. And the point is that many of those investors now are going to be chasing yield. So if they can find tenants, says the sense that rents are starting to rise, that's really going to be, if you like, the part of the market that now sort of, if you like, forms as people chase yield, even though the rates are starting to rise.
Yeah, look, I think so. And, even though mortgage rates are rising, fixed rate mortgages are rising, variable rates will rise later this year. Even if the RBA doesn't raise the cash rate this year, mortgage rates are going to continue rising. And but they still remain historically very, very low. And like you say, you still have that dynamic in play whereby investors are chasing yield. And certainly with the return of international students and skilled migrant workers, we're going to see increased demand for those inner city rentals. And there's areas where, investors typically look as those rental pressures come into the play, areas that maybe didn't do quite so well during the pandemic. And I think particularly with APRA's changes as well, affecting investors slightly more so, the lower price points of units as well is attractive. And we could see that part of the market really strengthen, because at the moment units are at a historic discount relative to houses.
And that's going to be an interesting part about that, with units being at that historic low in comparison with houses. Take you to Victoria, in Melbourne, 93 auctions passed in. Now, as I say, the clearance rate was coming down there. So that either means, A, that the seller, the vendor, is looking for too much and is prepared to dig their heels in order to try and get the price that they're looking for, or the potential buyers are saying, no, that's too much. We're prepared to sit back. We think there'll be other stuff coming on the market. And that's the key. If there's a lot of choice on the market, that's when all of a sudden the vendor has to start to change their tactics as well.
Yeah, I mean, you're exactly right. And we've certainly seen that it's been very much a seller's market to date. And that will probably start to change as we progress over the first quarter and second quarter of this year. We're certainly seeing that, new listings across our capital cities in January, it was the busiest month for new listings in 8 years. So that picture is starting to shift ever so slightly.
So I always highlight, the auctions and the clearance rates and all that type of stuff. But the other side of this is the private sales. And this is also an important part of the market where people are either doing deals or they're in country areas. There's not a big auction market going on. The auction gives us the price right there and now. But really, it's those private treaty sales in many ways give you the sense of the volume of the traffic that's going through just about every state around the country.
They do, and the market is still very strong. If we look at preliminary weekly sales volumes to date this year, we have started to outpace the volume of sales that we saw last year. And last year was a historically very, very strong year.
I'll tell you what, it's going to be fascinating to see which way it goes. And of course, one of the keys as you make the observation, interest rates, the expectation for interest rates, that's the final determinant.
Yes, certainly.
That's great. Eleanor Creagh, always great to have you in the program. Many thanks. Eleanor Creagh there from REA Group.